Hey everybody, it's Chuck Barone. Thursday, September the 14th, 2023. And I just got to say, the world's been upside down for a while. It just keeps getting crazier, man. So we knew today we were going to get a lot of data, and we did. The market reacting like it's the best thing ever. Well, we're going to talk about that. Before I get rolling on my little rant here today, I want to welcome everybody to the show like I do every day. Thank you guys for your support. You guys showing up every day like we do, watching the videos, your questions and comments, and all the cool stuff you guys do every day to support the show keeps us going here. We appreciate you guys. All right, so let's talk about these markets today. So we had data, 3 big items coming out today. Okay, we had the PPI number, we had jobless claims, we had retail sales. Okay, all these numbers came in significantly hotter than they were expected to. The market reacting like it didn't even happen at all, like all the news was great news somehow. They're putting the spin on it, wanted to blame it all on energy prices. So the market just having a great day today. Stock market flies. The Dow up 331 points, sitting at 34,907. The S&P, the broader market, up 37 points, 4,505. And the NASDAQ, the pharmaceuticals and tech part of the market, up 112. Nice day across the board for stocks, 13,926 on the NASDAQ. So here we go, man. Stocks and they're not in record-breaking territory, and this wasn't colossal gains. But in the face of the news we got today, I was really expecting the market to tank. It started to bounce right back and just took off, kept going. The bond market, sold off a little bit today, but not to the extent I thought it would. The 10-year up 4 basis points, sitting at 4.29%. Not much. The 2-year up 3 basis points, 5.02%. So there we have it. Not much. Markets just not reacting to the news. Now they say the markets are data-driven, so is the Fed. I'm starting to not believe that bullshit. Because it seems like they're going to take this data and make whatever they want of it, not what it really is. So anyway, the one thing that did react properly was the dollar. The dollar up strongly today, almost a half a point on the index, 105.33 on the dollar index, because people understand rates are going higher and going to stay higher in the U.S. It's got to strengthen the dollar. Duh. Okay, so dollar up today. Precious metals, you would think, with the dollar up above 105 would have a stinky day, but not really. Mixed day for metals. Gold actually up today, $2.10. $1,910 even for an ounce of gold. Silver falls 17 cents. $22.64 for an ounce of silver. Great prices in the face of this dollar. Now the dollar, the strength of the dollar always going to affect precious metals, whether it's gold and silver, copper, platinum, or whatever. The two we follow on this show most are gold and silver because that's what most of you guys own. These are still pretty fair prices for gold and silver. Silver actually was up over 25, so it's down 10% since then. Gold was up over 2,000, so it's down a little less, about 5%, I guess. And, with all things considered where the dollar is, these prices are still pretty strong. Metal holding up, and I think, let's face it, guys, this dollar is not going to stay elevated forever. And the second it starts to come down to earth, you're going to see gold and silver take off. Oil today, still higher, man. Another run for oil, up $2.10 per barrel, $90.62 for a barrel of West Texas Intermediate. The party's over, it looks like, for oil. Now, I was interesting because I was reading a JP Morgan analysis today that was saying that they expect oil won't be above 91 by the end of the year. $90.62 in the middle of September. They're not seeing, I guess they're saying the party's over for oil. I don't know. I think the party's over for lower priced oil. This is the driver. You know, this is when August oil prices didn't spike nothing like they have in September. But oil on a roll, man. Doing well. Bitcoin today, up $404.14, sitting at $26,612.80 for Bitcoin. Bitcoin holding its own, man. It looked like it was about to tank. It really did. Then it rallied back up, still sitting pretty strong. All right, so let's talk about the news today. I want to really kind of talk about this stuff. So the day starts, we get the PPI numbers. Okay, this is the producer price index, wholesale index basically. The number comes in 0.7% month over month versus 0.3% expected. So more than doubling what they expected. Crap number. PPI foreshadows future CPI. So this is telling us that CPI down the road is going to spike higher. Jobless claims, another big piece of data today, coming in at 220,000 versus 225,000 expected. Up a little bit. It was 217 last week, but still 220,000 is a very strong number. The Fed would like to see it around 285,000. So you can see not where the Fed wants to be. And retail sales today report triples expectations. 0.6% month over month versus 0.2% expected. So we got PPI more than doubling what was expected. Jobless claims coming in less than expected. And retail sales tripling what was expected. Somehow or another, they want to spin this into good news for now it's good news for the economy. You know, jobless claims low, retail sales, you know, consumers still spending money. Now the PPI number obviously not so great for the economy, but you know, these numbers, all three of them in my mind, working against the Fed's goal, working against 2%, working against pause, working against rate cuts, working against all of this stuff. Now, I'm just going by the numbers I see here. I haven't get into all the details because I don't need to. The bottom line is these top line numbers stink. They're horrible. Inflation is not going down anymore, guys. It's coming back up. And they might want to make it sound like it's better than it is. They're going to find the way to blame it, spin it however they got to spin it. But let's say it like it is, man. These numbers suck. Okay? Now, right after all this came, here comes the EU today, raising rates a quarter point and talking about how persistent and high the inflation is there in Europe. At least they're dealing with reality. Here in America, they want to blame it all on energy prices. Well, you know, energy prices have spiked up and energy prices, blah, blah. Guess what, man? Energy prices, gasoline, diesel fuel. As soon as those spike up, everybody raises prices. Everybody does. Because everything gets transported one way or another in this country, and we do a lot of trucking in this country, okay? So when transportation costs go up, everything goes up with them, okay? Now here's the bad news. Once everything else goes up, oil prices might come down, but everything else doesn't. It only goes up. The gas price might come down, but transportation costs don't get reduced. So this stuff gets trickling all through the economy next month. Now, energy has really spiked so far this month. We'll see how the month finishes. But they're going to have another doozy next month if oil keeps going higher or if it even stays at this number. These numbers are going to look like shit because oil flying higher in September, okay? So everything going up. And that we can already see now PPI foreshadowing, we get in these energy costs. Now they're going to blame it on, and they're going to spin it the way they want to, okay? But in my mind, if I'm sitting there and I'm Chairman Powell, there's no doubt I'm raising rates next week. Even a quarter point, just to let the market know we're on top of this stuff, man. Why wait? There's no percentage in waiting, right? So remember we were talking, we were watching oil very closely and oil was in that trough between 70 and 75 for what, 6-8 months. Finally just recently broke out. Well, that trough helped the Fed bring these inflation numbers down because the cost of oil was staying stable there. A little bit of breakouts, but nothing much, right? Well, now you got oil a little more volatile, jumping higher, going to make the Fed's job a lot tougher, man. Now the markets pricing in no more rate hikes this year. 97% chance of no rate hike in September. I might take a little flyer on that, man, and bet the other way because, like I said, why wait? Now the market already pricing in rate cuts early next year. I don't see that coming either. I don't see that happening. The New York Fed came out, said reported their report showing a 61% chance of a recession by next August. Crazy. Now here's an interesting little factoid I saw today. You know, we've talked about the inverted yield curve, short-term rates higher than long-term rates, always a signal of recession. 212 consecutive days of an inverted yield curve. It's a record. Higher than even 1980s. And we know the inverted yield curve in 1980 brought in a doozy, a whopper of a recession. Actually, the recession was so bad for a while there, people didn't even think Ronald Reagan was going to get reelected in 84, and he ended up winning 49 states. That's how bad that recession was. So I don't know if, the streak breaking that record tells us this recession is going to be even worse, but it doesn't sound like good news to me. It doesn't sound like good news. Now markets, this is interesting. The market's pricing almost a 40% chance that inflation at this time next year will be higher than it is this year. I don't know if I buy that one, but we've talked about this on the show many times about how getting down that last point from 3 to 2 is going to be the hardest, and it is. Okay? So now you got markets and economists and people talking about raising the target number from 2%, or learning to live with with inflation rates higher than 2%. That's not the Fed's mandate, guys. Okay? So what's happening is the fork in the road is coming. We've talked about this on the show many times as well. Powell going to have to make his choice. Do I fight inflation? One fork? Do I save the economy? Other fork. Because there's going to come a point where he can't do both. And we got 3 distinct possible scenarios here. You tell me which you think is most likely. We have the soft landing scenario, which the markets are pricing in and everybody thinks is going to happen, where we can bring inflation down to 2%, and we do it with no real big spike in unemployment and no recession. We have a chance at a hard landing. We bring inflation down at the cost of a gigantic recession and big job losses. Or we have now this new one I love called no landing, where things just stay like they are now, where inflation numbers are all over the place, well above the Fed target. We don't know just a complete market of uncertainty where no one knows what the hell's coming next as far as inflation, as far as the Fed fighting inflation. That would be, in my mind, the absolute worst possible scenario. I would rather Fed overshoot and cause a recession than have just a gigantic year or two of uncertainty where we never know what the hell's going to happen. If we're going to have a recession, and we've talked about that a lot on the show as well, well, guess what? Let's pull the Band-Aid off and get it over with. So this mealy mouth bullshit we've been hearing about, well, we're going to pause in September and blah, blah, blah. You know what? Inflation's high. Your job is to fight it. Do something. Anyway, guys, that's it for the day. I will not have a show on tomorrow. I apologize. Got a road trip. As you can see, I'm kind of dressed to hit the road today. So I'll be back on Monday. Tomorrow's going to be an interesting day in these markets. I wish I could do the show. But keep an eye on the markets. We'll talk about everything we missed on Monday. Have a great weekend. Go Bills. We got the Raiders this weekend. And we will see all of you guys again on Monday. Get out, relax, spend time with family and friends. Do the things you enjoy. Get away from the crazy. Government, money, Federal Reserve, markets. Move on to the fun stuff for the weekend. And we'll see you guys on Monday. Take care.